the questions start coming in. As usual, we try to group them into logical, more or less, sections. First, questions relate to our results. First question is about NII. With the current WIBOR, what kind of NII quarterly evolution do you expect? Is it fair to assume that the bulk of deposit repricing is still to come? What deposit beta shall we assume? I think that's the question.
Regarding the evolution of NII, we cannot provide very precise guidance due to the fact that we are living in an extraordinary period in which the interest rates have been growing permanently during the recent almost 6 months. And so it means that there is still further repricing of the loan portfolio that is going to take place in the second quarter, while at the same time we started also to gradually increase the interest rates on the deposits already in the first quarter, but also already becoming more visible in April. So, and at the same time, as we already showed in both on the retail and corporate side of the presentation, higher interest rates may also translate into some change of the deposit mix in which savings accounts and time deposits may gain again some space versus purely current accounts. Which, by the way, we cannot forget that we had the opposite situation when interest rates were cut just in the beginning of 2020, after the beginning of the pandemic. We had the opposite effect in which a part of the deposits migrated from savings accounts and time deposits to current accounts because we were paying almost zero in terms of remuneration of those deposits. So now we can anticipate some change. It's difficult to say exactly if we will come back to the same structure that we had before the pandemic or not. It's still too early to say. But of course we expect some change, which means that of course we also have to expect some growth of the costs of the deposits as time goes by, and the pace of the growth again is not exactly the same as the loan portfolio in the same way that it was also not the same when interest rates came down. So we provided in our financial report some sensitivity of the net interest income to changes of interest rates, but assuming that everything will be repriced with the current market rates as of the end of March 2022. And the sensitivity, if we would assume that everything is repriced, would be quite small, around 5 or 6%. But of course, this is assuming that everything would have been already repriced as of the end of March, which still did not happen, because as I said, due to the different repricing timings of the loans and deposits, there is still further repricing that will happen in the second quarter. So in the short term, we are still going to continue to see increase of the NII, but as I said, we also expect a gradual increase of the average cost of the deposits.
There are indeed many questions regarding NII, but we answered as much as we could. The other questions relating to results touch upon a cost of risk. There's one very specific question about a relatively low cost of risk in the corporate segment in the first quarter. What was the reason? I mean, any releases? And there was a couple of questions regarding our thinking on the cost of risk in further quarters, next quarters.
So first, the NPL ratio remains stable. So we did not face in the first quarter deterioration of the quality of the loan portfolio. Second, of course, we anticipate that the significant increase of interest rates can generate in the future some additional non-performing loans. And as a consequence, we anticipate that instead of having a cost of credit risk around 50 basis points, which was our original plan, that even we mentioned in one of the previous meetings, that it can be higher, but not significantly higher. For the time being, we are assuming that the cost of risk for the full year could be somewhere around 60 basis points over total loans. But as I said, for the time being, we did not see yet the deterioration of situation both in the retail and in the corporate portfolio. But as I said, we can assume that if interest rates will continue to go up and will remain high for some time, that of course then we should not expect 50 basis points over total loans, but rather somewhere in the range of 60-something basis points.
Thank you very much. Inevitably, there are questions regarding our Swiss franc portfolio. One numerical question is how many active loan agreements do we have in Swiss francs? I think it's very easy to actually calculate because we provided the drop of the number of active agreements and the year-end number, but for the simplicity's sake, it's below 45,000 at the moment. More important question is about the settlements. A comment on customer propensity. Do we expect similar rate going forward? Will people be less inclined to convert given PLN rates and so on and so forth? So what's basically the outlook for the...
Our target is to maintain these levels. So I think we said last quarter that our goal for this first quarter was to reach again these 2,000. So we did a little bit more, but I would say that this is our pace of execution, or at least our intention. The way that we structure our openness and the position with the customers, we are adapting more or less to what are the conditions. So there was a time that the idea of almost all the customers were to make early repayments. Then a lot of them went through conversions, then another early repayment again. Sometimes the concern were more the FX rate for the conversion. Now we see also that it's very important to have a good offer in terms of fixed rate on the conversion, and we are adapting more or less to that. We have been putting a lot of effort on this area, not only with a large group of senior negotiators to talk, and we always maintain the same person talking with the same customer and tracking all the conversations that were done during this period, but also a lot of our data analytics, trying to understand what are the groups, the ones that already have a low balance, the ones that have still a long duration for the loan up to the end, the younger ones, the older ones. So adapting these to this situation. We don't forecast in a quarter to make something outstanding, and our idea is to go like this. So our view for the Swiss francs is very clear. So we want to negotiate and reduce the portfolio as much as possible. Of course, this is a lot of effort and also a lot of money invested, but we think this is the only way to really to solve the problem. It's not just by provisions, because the problem before converting or settling, it's not solved. And another part also is to make higher provisioning. So it's in our view, it's the only ways to shorten the problem of this legacy portfolio that we are having.
Thank you very much. There were also questions relating to our origination of cash loans. In the first quarter, it somewhat dropped. On top of that, there was a question about the outlook for both cash loans and mortgages in the remainder of the year.
So there are moments that the commercial activity is very strong. but sometimes the financials are not so strong. There are other times that financials are very strong and the gross sales are not so strong. So I think this quarter is a quarter of very strong business financial results. So if we take out, of course, the FX legacy portfolio, we have very strong business and financial results shown in the adjusted return on equity, and also, which is also important, very strong operational results. So when we see these the efficiency results, so when all the savings, all the redesigning of the processes, standardization, automatization that were done are shown in the cost to income, adjusted cost to income. So it means that we are able to analyze, decide and disburse the mortgage at the levels that are very high without the needs of the teams and the costs that we were having 2 years ago, for example. But it's obvious that also when we are in a moment with a war in a country that are neighbor, with high inflation and with higher interest rates, so the demand for credits it tends to reduce. From the cost of the credit to the less confidence from the consumers, and this is obvious. We are believing that these, unless there are a lot of more radical changes, maybe we can see some improvement at the middle of the year. But it's obvious that we will see lower production of consumer loans and lower production of mortgage loans in the year of 2022 in the Polish banking system that we saw in 2021. This is obvious for us. However, the profitability of the production will be more interesting probably.
Thank you. There was also a question relating our cost rationalization activity, whether we expect further reduction of branches going forward, whether we expect further reduction of headcount, or shall first quarter be considered as a more or less stable level?
So we believe that the trend is this one. So there is a huge work done from the bank in terms of digitalization, and this digitalization is of course bringing a lot of efficiency and will decrease the need of physical presence as time goes by. It's a point of equilibrium that is together with the increase of business as well. So it's from one side having more business that will require or that will not require more physical presence, and from another side is even reducing the physical presence. We are not in a hurry, but there is a natural trend of reducing branches. We think that this will happen very normally in the next years. Probably we are in a phase of some slowdown on the reduction, and we will see another wave of increased reduction in next year. But anyhow, we are very committed with efficiency. So it's the process that still ends up to be very physical is customer acquisition. So it's a process that although the customers, they will look for pricing, for characteristic of the accounts and all of that for digital, the onboarding, the first account, the discussion with the bank employee about their needs, the first one is a lot physically. So this will slow down a little bit probably the pace of decrease of branches, but we do not see any business model in banking in the future in Poland that will require the maintenance of the physical presence that we have at the moment. So it will decrease for sure without any big target for that. So we will decrease as the consumer also will require less and less physical presence.
Thank you very much. Fernando, a few questions to you. They mostly regard capital. First question was about the impact of negative other comprehensive income on equity. What is the size or impact of negative valuation of bonds? There was also a question about capital in the context of our ability or willingness to produce more loans, whether we will be selective or are we reducing appetite and so on and so forth.
Okay, so the reduction that we had in the capital ratio in the first quarter was mainly driven by the impact of the revaluation of the bond portfolio that is valued through other comprehensive income. On the page 36 of our report that today published, we can see that the result in other comprehensive income of debt securities in the first quarter was minus 394 million zlotys. So 70% of this amount affected own funds, and additionally also due to the fact that this year the impact of this valuation of the bonds on our own funds is bigger, from 30% in the end of December to 21 to 70%. Also there was an increase of the weight of the losses that were already shown in the end of the year. At the end of the year, just to remind, we had around minus 700 million zlotys of negative valuation of the bond portfolio. At that time, it counted as 30% of that to own funds. Now, with the additional depreciation, 70% of that is booked in own funds. So the majority of the impact on the decrease of the capital ratio is in fact driven by the valuation of the bond portfolio, because the net loss, which also affects own funds, was much smaller than the one that we had 1 year ago. It was only 122 million zlotys. Of course, going forward, there will be a moment in which the yields will stabilize, and of course these losses will start to be reversed because through the NII, in fact, because the bonds that have this negative valuation have yields below the current level of market rates, and so gradually these will come through the net interest income line, and so of course how much it will be reversed this year depends on to what level the bond yields will stabilize after this significant correction. So I think this is the biggest explanation. At the same time, this impact was partially offset by a reduction of risk-weighted assets during the quarter. Regarding the question if this affects or not our appetite for lending, no. In fact, we had already said, I think 1 quarter ago, that we were focused in continuing the development of our retail business and also companies' business, but we were not fighting for large single-ticket deals, which have relatively low margins and a high consumption of capital. And the same approach is kept on an ongoing basis.
Thank you. There was also a question about our low cost income, but more importantly, what are we going to do with the benefits of low cost income ratio? Are we going to invest, spend more, and in general, what is the outlook for costs in 2022?
We are maintaining our strategy, and we have a cycle that we will invest heavily in terms of digitalization. So it's we put to our targets in terms of not only customer growth, but then also we say that we would achieve 3 million, but also in this 3 million, 90% will be digital customers, and also that the sales would be in average 80% of them through digital channels. So this means a lot of investment in terms of data analytics, in terms of new systems, new people, new technology. But these have been the cycles that we are doing. So there is nothing radical to do at the moment. And I would say that this is so we would keep investing from one side in the development of the bank, their customer base, their products and satisfaction of the customers, and then the digitalization that we see as the only way to have a viable, cost-effective banking business in the future. And also there is other side that is very visible that we are investing, which is solving our legacy portfolio. So it's more profitability and better capital position we will have, faster we will negotiate, provisioning and solve this legacy part. Of course, every time that the Swiss franc is strong and the zloty is weak, we delay a little bit the ending process of this saga. But anyhow, we are as committed. So just because sometimes it's a little bit longer or more costly, as it was shown, for example, this quarter. So even when it is more costly, the settlements, we do not give up about doing the settlements.
Thank you. We also have a question about our bond issuance plans in 2022 and 23. What is the size of the planned issuances?
I will say around the number for 2022. The number can be a little bit higher or lower, but somewhere around 300 to 500 million euros could be the amounts to be issued during the current year. In the next year should not be higher than this, but in fact it always depends on the update of the final MREL target, which is something that will come every year. So we had a recent update in the end of March, and in 1 year time we'll have another update. So things can change a little in the meantime. But for now, this is what matters is the size that we could do during the current year, which is the one that I mentioned.
Thank you very much. I think we've reached the end, and obviously the inevitable questions that came in very different permutations and forms relate to the government measures disclosed yesterday. I think Noemi, that they put them most precisely, so I will read it out loud so that you know. The question is, can you please comment on the government measures disclosed yesterday? Do you expect the new 3.5 billion fund to cover the 1/6 decline on loan yield? Otherwise, how could this be implemented? Do you think the comments on WIBOR are a part of the ongoing discussion or something additionally worrying? And there are many other questions about what we think of this idea and how this might impact our business.
So, precisely on this part, this information is very recent. We need to have some time to also to see what's going to be the impacts and also how to execute. The previous fund to support the borrowers was created, but then never use it because we need to understand that in Poland mainly we have inflation based with salary increase. So the disposable income and the conditions of the consumers in Poland is very, very strong. So although it's obvious that the cost of credit will increase, but even so, to go to a level that would require assistance, we end up to be to a smaller group. So we of course this will be a cost for the banking sector. I just hope that we will not just increase the fund without knowing how to use it, as it was last time. So it would be better if we start to use it and then we grow whatever it needs, because at the end of the day, for the banks, it's a contribution, but if it also helps to solve NPLs, is not so bad. What the worst is just to put another 3 billion on a fund that already have 600 million, and then the money stays there without any usage. In terms of the VIBOR, we will need to see. Of course, it's every time that we make these radical changes, it's always a disturbing thing for the market. We need to understand also that the VIBOR is not just used in mortgage loans. It's an interbank rate. So I think this needs to be discussed and then with the proper timing. We heard that it's going to be in a year time. The possibility to change to overnight rate. If it is overnight rate, we are talking about a difference that is not very large in the long term. But I think a long time ago or some time ago, I said something against the fast and sharp rate hikes that sometimes happen. And some analysts also then tweet about this, and this is clearly not our favorite environment. We prefer to have a cycle that is longer and then in small steps, because this is the cycles that allow to the consumers to change their behaviors. These radical steps make sometimes too fast adjustments, but also these adjustments also have decrease of demand for credits, and sometimes increase of cost of risk, and worse than that, a lot of turbulence and public pressure. But for time being, also I would like to highlight that from another side, the Polish banking sector is highly profitable. So if we still have a very costly banking tax, and even so, the banks, if we would take out the Swiss franc mortgage costs, the system is very profitable. So sometimes then the system end up to being able to introduce in turn inside of the economics of the systems and inside of the pricing these additional costs that are put in top of the system.
Okay, thank you very much. I think we've answered all the questions diligently, so thank you very much for this, gentlemen. This concludes the Q&A session, and maybe it's time for closing remarks.
No, just I end up to say a lot of things in the Q&A, but so we end up with the results that we are quite happy. Of course, it's a loss, but when we extract the cost of the Swiss francs, we see a very solid business model, and with a very profitable bank. Also, we are confident that although with inflation and some increase of the costs, but this effort in the last 2 years in terms of efficiency are here for staying, so we will have a much higher rate of increase of revenues than we will have in terms of costs. And this is again, we maintain our position in terms of Swiss francs, as I said, and we hope that we will keep in a quarterly basis to bring this capacity of settle between, or at least 2,000, let's call it. Let's maintain this target of, in a quarterly basis, to be able to deliver around 2,000 settlements, and like that every quarter to solving the problem. As Fernando said, the cost of risk that we understand that have been or is a worry of a lot of the analysts, at least when we look to our portfolio and when we incorporate in the companies the dependence of Ukraine or Russia for raw material or for markets or something like that, or even the higher installments in terms of individuals, we see an increase of the cost of risk, but nothing dramatic. And besides that, we are, of course, very confident in terms of this strategy for 2024. All of these changes, these additional charges that we are talking about, they will be, of course, with a negative impact in the short term, but at the end, in the long run, we don't see that this will be dramatic, because, as I said, the market tend to adjust and to reprice to accommodate these additional costs. And we are quite happy for the numbers that we are having in terms of more strategic. So number of digital customers, sales done in digital, customer acquisition. So all of that, we believe that these numbers are quite interesting. Even in terms of corporate, we also try to give some flavor in our presentation and to disclose a little bit more what we are doing in this segment. So we think that everything is in line in our plans to achieve what we propose for ourselves in 2024.
Thank you very much. This concludes our call. We will meet precisely in 3 months' time on the 26th of July. Thank you very much for listening. Thank you very much for your questions. And as usual, the IR team is at your service. Thank you. Goodbye.